Okay, sales receipts. This problem is going to be a longer one. We have a lot of journal entries to do, but once we get started with it, the journal entries should go pretty quick. Uh, they start to become very similar. So we have S. Archer. They own a spy supplies shop, and we are given the beginning balances for everything. We'll need that when we do some T accounts. We don't need them quite yet for the journal entry part, but we want to keep them in mind for when we start our T accounts. And then we have the following transactions that occurred in August. So August 1st, let's start with that one first. S. Archer invested an additional $13,500 in the spy shop. So let's go ahead and do that one. We've done that one since the beginning of the class. And so we know that we have cash that came in from S. Archer, $13,500. So we'll increase cash or asset with a debit. And then we have their capital account. So Archer's capital account. And that goes up as well. Not too bad. Let's keep going. So they sold $600 of merchandise on account to Kane. So Kane said, put on my account, I'll pay you later. So they owe us, the company, the spy shop, $600. And so it will become cash very soon. So we know it's a receivable. So it'll be accounts receivable for $600. The terms are 4, 10, and 30. So that means if Kane pays within 10 days, they get a 4% discount on the 600. If not, then the full amount is due in 30 days. So we'll have to watch our dates on when they pay. And then the cost of the merchandise is $410. So when we sell, we need to record also the cost associated with it. So let's go ahead and do our entries. We have 2 entries we need to do. First, we'll record the sale. So that was accounts receivable. We said we didn't get cash from Kane. They owe us. And they're going to pay us very soon. So we're going to receive $600, hopefully soon. And then we had a sales. We can write revenue. It's a revenue, but I believe your book writes just sales, but I wrote revenue just to remind you that's a revenue and that's a normal credit balance. All right, so we recorded the sale. Now we have to record the merchandise. The merchandise is gone, so we record a cost associated with that merchandise. So we know the merchandise is gone. I just told you it's goodbye, it left, we sold it, so it's off our shelves. So we need to lower that asset of merchandise. So we can record that part first. We know that's merchandise. Why not? If you didn't know your debit yet, because it's a new debit, but we know merchandise inventory is going away, and I can't remember the amount. I think it was $410. Okay, so we're going to record $410 of merchandise going away, and then we have a cost associated with this, with that sale. So we have you'll learn in financial accounting about the matching principle, and with sales, with revenue, there's always an associated cost as part of that matching principle. And so yeah, we have a cost to record, an expense account, and so it's called cost of goods sold. But like I said, it's an expense account, so its normal balance is a debit, even though it doesn't have the word expense with it. All right, so that was the cost for those goods that were sold. All right, so now we're done with that journal entry. So we have a 2-part journal entry. We record the sale and then we record the associated costs. So we're going to do that quite a few times for practice. It'll go fast from here now. So next we have is that we sold merchandise on account to Dylan, and we have terms 4, 10, and 30. Looks like the same terms again. And then the merchandise cost was $265. So we're going to go ahead and now record that as well. So that's for August 4th. So we know now we have 2 entries to record. So we're going to have, again, accounts receivable. Let's scoot this up a little bit more. So we'll have accounts receivable, and I already forgot. I think it was Dylan, right? And I don't remember the amount. 400. And that was our sales. All right, and I just we just learned that, okay, well, we have to record an associated cost along with it. So we have cost. Oh my goodness. All right, and I remember, I think it was like 260 something. It was 265. I can see that it's mad at me because I spelled receivable wrong. I'll fix that so it doesn't make everybody go cross-eyed. Wrong correction. All right, that's fixed. So next we have another transaction on the 9th. We sold $100 of merchandise to Gil. And the cost of merchandise was 50 bucks. All right, let's be consistent here. Come on, so sloppy. All right, another two-parter. So we have, again, accounts receivable. And that was Gil. And that was for $100. We had our sales. Again, for 100 bucks. And then we have that two-part, right? We got to record the cost for it. So we'll have cost of goods sold. And then we need to say the merchandise is gone. So we're going to decrease our merchandise by that cost, which was 50 bucks. Okay, whew. All right, so that was up to August 9th. So now we have August 10th. So on August 10th, they received cash from Kane in payment of August 3rd's transaction, less the discount. That was nice of them to remind you to take out the discount. But if not, look at the date. It was sold on August 3rd to Kane, and then we received the cash on the 10th, right? That was less than the 10 days. So they get that 4% discount. So we'll have to do a little calculation to figure out the discount off of that 6%. Off of that $600. And so we'll bring up our calculator and we'll calculate that discount. So it's 600 bucks and it was 4%, right? 4%. You could do the percentage sign one as well. And so we're looking at $24. So Kane does not owe now $24. They get a sales discount. And so we're going to reflect that. So we're actually going to get $24 less in cash. We're not going to get $600. Instead, we're going to get 600 minus the 24, right? And so we're going to get Archer Spice Shop is going to get $576. So let's go ahead and start recording that. So I'll leave that calculator there as a reminder of what we're calculating. And so on August 10th, now we're collecting. So we're going to only collect $576. All right, so that's our cash. And then we know, well, of that $600, $24 was our discount. So we'll have this contra revenue account called sales discount. And since it's a contra revenue, it's not a revenues balance is a credit. And contra, we'll think contrasting opposite. So it's going to have a normal balance of a debit. So we'll record sales discount with a debit balance of 24. Hey, that is going to make us balance because now that equals 600 and we know we are decreasing. We're no longer looking for from Kane $600. So Kane's $600 receivable goes down by $600. And let's remind ourselves, let's go back up to August 3rd. And on August 3rd, we recorded a debit for $600 for that. So we have to decrease the full amount. We'll always decrease the full amount. That's what we're not looking for anymore. And that way now we will balance because we're getting less in cash, getting the receivable to go away. We're only going to get 576. We're not in balance. We need a debit. Okay, that's our contra revenue account called sales discount. Perfect. So now we're good. Let's move on and to the next transaction. Looks like it's not till August 20th, if I laid those out right. Let's see. Yep, so August 20th, we sold $400 merchandise on account to Figs. Same terms, and the cost of merchandise was $2,750. Okay, so that's fine. We can do that. We know it's a two-parter again, so we'll have accounts receivable now for Figs. That was 4,000. And that was our sales revenue. And now we got to record the associated cost. So let's bring this up a little bit for you. And so we'll record a debit to cost of goods sold, and then we'll record, that'll be our expense. And then we're saying, okay, the merchandise is no longer there. And so we'll record a credit. And that was for $2,750. Let's fix that. There we go. All right, perfect. So our two-part is done now for 20th. So up next, we have on the 22nd, we received a cash payment from Dylan in payment of August 4th transaction. All right, they didn't say less discount for me, but let's double check. It was on August 4th, okay, and the terms were 4, 10, and 30, so it had to be 10 days. Well, we didn't receive it until the 22nd, way past the 4 days. So the full amount, the full $400 is owed. So let's go ahead and record just cash and then credit our accounts receivable, no discount. And that was for Dylan. All right, so now we have August 23rd, it looks like. So let's go ahead and go back there to August 23rd. Collected cash sales of $3,000. The cost of merchandise was $1,950. So this wasn't on account. So we're just going to record straight that we got cash. And it's still a two-parter. We still need to record the merchandise, the inventory that's going away, and the cost associated with it. So it's still two-part. We just don't have accounts receivable, so we don't have to worry about tracking that. We just have cash and sales. So let's go ahead and record that. We just have cash, and that was for $3,000. And sales, I forgot the cost. Give me trouble there. Okay. 1,950. Okay. Get back down here. Oh my goodness, so many. Well, cost of goods sold 1,950, and then our merchandise inventory no longer on the shelves for 1,950. Okay, so we're done with that August 23rd transaction. Now we have August 24th transaction. So let's go look to see what that one is. All right, so on August 24th, we issued a credit memorandum to FIGS for $2,100 for merchandise returned on the August 20th sale. So we see that there was an August 20th sale for 4,000, and of that, 2,100 was returned. And so the cost of that related, they calculated it for us, which is nice. The cost of that related merchandise that was returned was 1,300, and we're going to put that back on the shelves. We're going to put that supply item back on our shelves. So that's how we're going to record it here. So we're going to do some flip entries. It'll look very flipped to the August 20th. And so let's go ahead and get that recorded. So August 24th. So we have a return that we need to record. And it's a two-parter again. So we want to keep track of all our returns. So instead of debiting a sales account, we're going to make a new account called sales, returns, and allowances. And that's going to keep track of all our returns or any discounts we give, maybe for faulty equipment or something that's missing or it's not the right color. We might give them a discount. So this is this account called sales, returns, and allowances. And that will keep track instead of debiting sales. So a lot of times you're like, oh, well, I want to just flip it and debit sales. Now we're going to keep track of our returns in a separate account. And so that is our another contra type revenue account. And then we're not going to look for anymore. I forgot who it was. I think it was FIGS. We're no longer going to look for because they made a return, and so we're no longer going to look for part of that money of that 4,000 it was originally. We're no longer going to look for 2,100 for them. So we need to decrease that receivable, so that way we're not looking for that full amount. Okay, so then we have the other part, which is for the cost associated with it. Remember, we recorded that cost of goods sold, and we said the merchandise was gone. Well, we're putting $2,100 worth of merchandise now back on our shelves. So we're going to have merchandise inventory increased again because merchandise inventory is an asset, and so it increases with a debit. That makes sense. And they told us in the problem up here that it was 1,300. Let's scroll all the way up there just to review. So we can see the merchandise was 1,300. Okay, so we're going to put that back on our shelves. So let's go ahead and reflect that in that other part of the entry. All right. So we have that debit, and then, well, we recorded a cost associated with it, and that was that cost of goods sold. Well, we got to take away that. So it was originally debited cost of goods sold. Now we're going to just credit to get rid of it. All right. So this one was essentially a flip of that journal entry that we recorded, but it was just for the amount that was returned for the associated cost. Okay. Now we have an entry on the 26th. So let's keep going. I know, lots of journal entries. All right, they received cash from FIGS in the payment of, oh, let's fix that. Okay, we're better now. So issued credit oh, excuse me. We have received cash from Figs in payment of August 20th. So I was missing August 20th. I was like, I don't know why. So I made a mistake there. But we got it now. So received cash from Figs in payment of August 20th. So we would look at August 20th. And they were nice. And we wrote in, don't forget about the credit memo and discount. So that was nice. Normally you would have to just pay attention that, oh, let's go check to see what Figs had happened. Well, we see that we sold it on August 20th and we do have a 410 for the discount. Okay, let's look. August 20th and receiving it on August 26th. Oh, okay. That's within the amount, so there is going to be a 4% discount. But there was also a credit memorandum. There was returned merchandise for 2,100. So we know that they don't owe 2,100. So we're going to say, okay, let's do the math. Let's just show. So we have 4,000, right? That we sold, that Figs had owed us originally, but they returned 2,100, all right? So that was 1,900, and they paid within the 10 days, so they get a 10% discount. Excuse me, a 4% discount. So times 0.04, the discount amount is $76. So we need to remember that as well. They don't owe $76. So of the 19,000, remember again, 4,000 returned 2,100. So of the 1,900, $76 is not owed because they get that as a discount. So we're going to get $1,824 cash for them. So very similar journal entry. We just had one extra layer because there was returned merchandise. So very similar to the one that we had done for Kane, which was right here. Very similar, but we just didn't want to forget about that returned merchandise. So we have right here, cash received. And I already forgot the amount that it was. So let's bring up that calculator. 1,824. All right. And then we had our contra account, sales discount. And that was for that $76 that we had calculated. Again, that was the 19 times the 0.04. Okay. And then we're no longer going to look for on the accounts receivable for Figs the 1,000, the full amount, right? We always do the full amount. Okay. Let's keep moving along. So now we have an August 28th. We're almost there. We're almost there. August 28th, it says collected cash sales, 6,600, cost of merchandise, 5,200. Nice, easy transaction, right? Very similar to the 23rd. We can do that. So no accounts receivable to worry about, but we do have to do that two-parter. Let's bring this up a little bit more for you. And that was 6,600. And then we have sales. It's a long video. All right, and then we have to record that associated cost with that, and that also reflect that the inventory is not there anymore. Perfect. Almost done. I think we have August 30th now. We can get all the way back up there. Oh my goodness. Okay. All right, August 30th. Sold spy equipment. They were just checking to make sure we're paying attention here. Sold spy equipment for $650. And they said they sold it at cost. So maybe it was a special deal with a special company. And they said if you pay cash and you're special, we have some special deal where we did some other work or whatever. We're selling you at cost. So that's going to be our related cost with that. So let's go ahead and record that spy equipment for cash. So let's go back down here. All right, so I have cash for $650, and then we have just spy equipment. Okay. So let's keep going. We have a couple more. Sold merchandise priced at $4,400 on account of Dylan. $410, and the cost of merchandise was $3,500. We've done this one so many times. We can do this. Oh, let's go ahead. It's two-parter. Bring that up a little bit more. All right, so we have our accounts receivable. I think it was Dylan for $4,400. Our revenue of sales. And then we have the related cost. And that was $3,500. Let's fix that. All right, perfect. Let's see. Are we all done? No, we have, oh, so close. We have a couple more to go. All right, let's go back up there and see what we got going on. All right, so we have issued a credit memorandum to Dylan for $770 merchandise returned from August 30th. Okay, and then the cost of that related one was $375. We've done this so many. We're okay with that. We're going to record that return, that sales returns and allowances we know about. So let's get all the way down there and finish that two-parter. And that was $770. And that was Dylan. So after all this practice, we should be fairly good with these regular types because we've done so many of them. I'm going to put this merchandise inventory back on the shelves, and that was $375 for the cost of it. And we're going to take away that cost of goods sold that we had. So we're going to decrease that expense account, the cost of goods sold, for $375. All right, perfect. So next we have is T accounts. Oh my goodness, we're almost done. I didn't do all of them. We're not going to do all of them. We can do Kane Dylan and Figs and Gil. I can see that I need a better space here. So we're going to do this in another video, all of this, and then we'll keep track of their accounts receivable, and then we'll do a schedule of accounts receivable. So this will be another part video in case you need it for the T accounts.